All right. Welcome traders, welcome to this video. So as promised, I made a post on my Twitter account that I was going to do a video that is based on volume. All right. And if you have been following for some time, you understand or you know that I'll be talking about volume. All right. And as a day trader, I'm not talking about being a swing trader or a position trader, which being a position trader, I recommend you focus more on macroeconomic that can affect the market. All right. So economic indicators like interest rate, inflation, seasonal tendencies, and the rest, right? For long-term move in the market. But as an intraday trader or a scalper or a day trader, you need volume. All right, you need volume. Very, very important. You need to know areas and price where volume are actually lying, right? To make informed decision. All right. Now, one thing we need to understand is that volume trading, right, has different way, has different approach. All right. Some use what they call the DOM, the depth of market, whereby you have access to real-time data now, and then you get to see where all these orders are being placed in real time. All right, in real time. That is called the DOM, the depth of market, right? Depth of market, DOM, DOM. So that is one tool you can use, right, to get access to the real time orders, right, in the market. And some of these are not some, right? The DOM is actually a paid software. You can use Sierra Chart, you can use Ninja Chart, you can use some few couple of softwares out there to have access to the DOM, and it gives you access to the real-time data of where the big banks, right, the hedge funds actually putting in their orders when it comes to volume. All right, and then some people use the footprint chart, what they call the footprint chart. Now I'm on my TradingView, right? TradingView has the footprint chart, but you need to subscribe for the premium for you to have access to the footprint chart, right? Let me show us what that means. All right, this is volume footprint chart. This is what it look like. Okay, I'm taking my network. Let's give it some time to load, right? So as we wait for the chart to load, right, like I say, we have the DOM. The DOM shows us the intent of the market players, right? The intent, of where orders are lying, right? You see the price in real time where orders are actually really lying. But for the footprint, it's historical, right? It only shows us what has happened before. All right, that is history. What has happened before at every price level, right? And then you get to see the delta, the total volume, and every single contract that is being traded at every given price. All right. This is Euro USD as of Friday, right? That was on Friday, the 21st of February. You can see that around 1.04600, we have 5,000 0.2. We have 5.02k contract that was traded at the ask side, and then we can see 4.96k contract that was traded at the bid side, right? So you get to see all these things where orders are, where big orders are, or where big orders was being traded in the footprint chart. All right, but like I say, this only shows us history, right? And it's also a very, very powerful tool. If you have the money to subscribe, you can subscribe. But I am not here to talk about footprints. I am not here to talk about DOM. I'm just giving you an head view, right, of the different way, right, you can have access to volume trading, right? So I know not all traders have have the money to pay for subscription, right? Not all traders have access to pay for Ninja Trader to have access to the DOM, that's the depth of market, or Sierra Charts, because some of these softwares are just so expensive. All right, and then for TradingView, if you want to have access to the footprint, I think it's around roughly $60 per month. All right, but if you are going for a year, right, they are going to definitely give you a discount, all right, of about, I think, almost $50 per month, right? That's if you are going for a year plan. So anyone you can go for, if you have the resources to go for it, you can go for it. But before you go for it, please make sure you learn it first. All right, learn how to use it so you don't just waste money all in the name of subscription. All right, and of course, if you want to pay, even if you don't, of course, if you don't have the knowledge, right, you can also pay for it. So you use it to learn. Everything is sacrifice, right? You pay for something or to get something. All right. So, but here I'm not going to talk about, like I said, I'm not going to talk about the footprint chart, right? So what I'm going to talk about, let me change this back to candlestick. All right, let me change back to candlestick. So what I'm going to talk about is what I call, or what they call, right, the CME volume matrix, right? You can see it on the screen, right? Is the CME volume matrix. And in this video, right, this is what you're going to learn. By the end of this video, you understand what call and put options mean. All right, follow me carefully. All right, so you don't miss any step. All right, please don't fast forward this video if you really want to get what I will be explaining to you. All right, you will get to understand what call and put options mean. We'll get to know how to analyze strike price and volume. All right, volume is very, very important as a day trader or a scalper. All right, we'll get to know how, by the end of this video, you know how to analyze strike price and volume. By the end of this video, you also learn how to use this data for smarter trading decision. All right, and also we are going to look at what is CME Group and strike price. All right, what is CME Group and strike price? So these are the things you will learn by the end of this video. First of all, I want to tell us what is CME, the Chicago Mercantile Exchange, right? The CME, right? The CME is the largest derivative exchange in the world, where traders speculate and hedge on the forex, commodity, stock, all right, and futures, and also options, right? Let me take that again. CME Group is the largest derivative exchange in the world, where traders speculate and hedge on the forex market, the commodities market, the stock market, and more, using the futures and option markets. All right, so it's as simple as that. All right, the CME Group is the largest derivative exchange in the world. Take that. You should note that down. Then this is the exchange where traders can speculate and hedge on the forex, commodity, and stock market using the future or option contracts. Right? So it is very, very important we take note of that, right? And then so let's move on. Let me go back to the website. All right. Now this is the website. I'm going to drop the link below the video, above this video. Just check for the link, so it will take you directly to this website. All right, so when you come to this website, the first thing you want to do, right, when you come to this page particularly, the first thing you want to do, you're going to see a lot of things. Let me refresh that, right, so we get to see it very well. All right, once you come to this website, this is how it's going to look like. I'm trying to refresh it. Please follow me carefully. This is what it's going to look like at first. So you want to do some kind of adjustment to it. So at the top here, you see where the right products. All right, you see where the right product. Now you are going to click on this arrow, right? Now you can use your phone, you can use your system, anything, any device you are providing, you have access to the internet. All right, so you're going to come on product. Now you're going to see agricultural products, you're going to see cryptocurrency, you're going to see energy, you're going to see equity index, you're going to see interest rate, foreign exchange, metals, right? The metals, as when we talk about the gold, the silver, the platinum, and the rest. Interest rates, you already know interest rates already, so you shouldn't go over that, right? But since you are trading forex or you are trading crypto, you come to whatever you are trading. So I trade forex the most, right? So let's go to forex. Now, when you come to forex, right, the products they are going to list all the products under the foreign exchange, because you're going to see Euro USD. Now, on the futures market, the Euro USD, the code is called EUU/6E. All right, that is the code for Euro USD in the futures market. So you're going to click on the Euro USD. That is if you're going to trade Euro USD, of course. So for this video, for the purpose of this video, let's use the Euro versus the dollar. We're going to click on it, and then we'll give you some time to load. All right, let's click on Euro dollar. All right, it's going to load now. This is the volume matrix for Euro USD. Now, once you come here, you're going to see something. OI simply means open interest. OI change simply means open interest change. Well, we are not interested in that. You're going to see report summary, most activities, sorry, and then heat map. This is where we are interested in the heat map, right? We are interested in the heat map. So you're going to move down to where you see volume. You're going to see open interest for the heat map, the open interest change. Now, this is not the video for this. Maybe probably in the nearest future, I'll do a video to explain all these things, right? So we are only talking about volume here, all right? So we are going to head over straight to volume, all right? So we are going to give it time to load, right? Click on volume and boom, here is the volume matrix, right? Here is the volume matrix for Euro USD. Now, all these things here, time will not permit me to start explaining them one after the other. Probably I'll do a video for it, but let me just give an overview, right? This is Monday, right? This is a contract for Monday. These are contracts for Tuesday. These are contracts for Wednesday. These are contracts for Monday, Tuesday, Wednesday, Thursday, Friday. Then we're back to Monday again. All right. But like I said, time won't permit me to start breaking them down one after the other. I'll still do another video that I'm going to break down everything bit by bit. Like I said, we are only looking for volume. All right, areas of volume in this video, and that was what I promised on the timeline on Twitter, right? Sorry, on X, right? So now, once you come to volume, here, this place is called the strike price, right? Let's go back to my slide, right? We're going to come here, all right, and then understand the CME volume matrix, right? The table shows open interest and volume for different strike price expiration, all right, for different strike price expiration. Now, the C, anywhere you see C, it means calls, right? And anywhere you see P, it means put. I will explain that. Now, write that down. Anywhere you see C, it means calls. And anywhere you see P, it means puts. That is how it is being displayed on here, right? Let's go back there. All right, you can see C, P, C, P, C, P. That is call and put. All right, call and put. All right, so let's go back to the slide. Now, follow me gently. And then you see a green box highlighted with significant trading activities. All right. Now let's go back to the chart, right? We are going to see here, right? We can see this green box, right? This place that are shaded green, thick green. Those are where, like the slide say, these are green boxes highlighted with significant trading activities. All right, significant trading activity. And here, once you see that green box, right, it helps traders see where market participants are focusing their trades. All right. So where the thicker the green, right, the thicker the green, it shows that the market participants are focusing their positions in that particular strike price level. So take note of that. This is very, 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 very important, right? So I'm going to take us back to the CME Group website, but I want to break down, I want to explain everything now. You can see where you can see the call versus the put options that I explained here, right? Wherever you see C, it means call, and whenever you see P, it means put. That's how it is being displayed. That is how it's being displayed. All right. I think I'm too fast. Let me calm down a little bit. All right. So now for the call option, which is C, now this give the right to buy at a specific price, which simply means bullish. Right, which simply means there are bullish, there are buyers, right, there are bulls at that particular price level. So wherever you see C, right, it means a buy signal, all right, a bullish signal, right? So it gives the right to buy at a specific price. And whenever you see a put, right, which is P, letter P, right, look at it here. Let's go back. This letter P here, right, it simply means that it gives the right to sell at a specific price, in brackets bearishness, all right, which means the bears are that particular price, strike price level. Now, trader can use these calls if they expect price to rise, or if they expect price to rise. Sorry, trader can use calls, right? That is the C. Can use call if they expect price to rise, and then they can use the put if they expect price to fall. Follow me carefully, all right? You can use, if you see the call like I explained here, right, it simply means that you're expecting a buy, you're expecting price to rise, all right? And then if you see a put, you're expecting price to to fall. All right, so it's very, very important. So let's go back to the CME Group website. All right, look at it here, right? So let's say, for instance, now, right, we have let me take this off. Remember, we say the C, right, is call, which simply means that buyers are present there, and then the P is buy. All right, sorry, the C means call, which means buyers are present there, and then the P, right, is a sell signal, which means sellers are present at that particular price level. So for Euro USD, right, around 1.0425, right, we can see 2,831 contract on the put level, right? You can see 2,831 puts contract, right, around 1.0425, which simply means that traders are betting that price is going to go lower, all right, at this particular price. All right, at this particular price. And this is where I drew it, 1.0425, which simply means that a lot of traders are betting that price are going to drop below this price level. And remember, right, have this at the back of your mind that it has an expiration date. Look at this, right? This MO4G5, right, has is going to expire in 1 day, right? That is by the end of Monday, right? This contract is going to expire, and once it expires, contract do expire. I'll do a video, like, it seems I need to do a very comprehensive video explaining the expiration and why contract expires. All right, so you understand, contract do expire. All right, so if I put my cursor here, you see where they say this contract is going to expire on the 24th of February 2025. All right, so which simply means that by the end of Monday, if price doesn't get here, which simply means that the contract is going to expire. And even if price gets to that point and then it sells off, all right, and then it sells off, it's still going to expire. All right, so but for now, since it does not expire, we have around 2,831 contract, sell contract, that is a put contract, on this price level. All right, which simply means that for people who, let's say you have a strategy, all right, now trading volume on its own is not advisable. All right, you need to have a strategy. So it just only gives you, what it does that since you have a price level, if you look at your strategy, let's say your strategy is telling you to buy from this level, all right, it's telling you to buy from this level, and then you look at it, and then you look at, but the contracts, sellers are more at that particular level, sellers are more, then which simply means you have to flip your bias. Maybe probably wait for price to get there. If you see that the market is not holding, let's say the market is trading below it already, you want to wait for maybe a retest back, and then you short to that direction as well, probably, right? And one thing you should understand is that because you are seeing prices at this particular volume does not mean it's going to hold, right? We are in a game of uncertainty, but at least it gives you a higher win rate, like in the sense that, yes, since orders are here, since the market participants are looking at this particular price, there's a very high tendency that your market is going to react at that particular level. All right, so having that in mind, that we have a lot of sellers around this place, having that in mind, let's say you have your strategy and trying to tell you to buy, you already know that your market structure or whatever is a buy scenario, for example, right? But sellers are much around there. So there are a lot of sellers around that particular price. People are betting that price is going to go below that level. All right, and this stuff here is free. You just have to register. You just have to register on the CME Group website, and then you have access to it already. All right, so having that in mind, you don't want to be looking for buys around that level. All right, you don't want to be looking for buys, except if you have access to real-time orders, whereby you are seeing order coming in, and then you are seeing buyers coming in, flowing into the market. I don't know if you understand. So since you have it in mind that, let's just look at something quick. Let's look at something. Now, I know some people might be like, all right, the market has gone up, so we are waiting for price to come here so we could buy. But bro, there are a lot of sellers here currently, except the contract expires, right? So let's check. So let's look at something around let's say 1.05, right? Look at 1.05. There are 2,261 call contracts, which is buy contracts are all right around this price, so it's 1.05, and then we have 363 sell contract around those price. So if we minus 363 from 2,261, right, we still have more buyers, right, more call options, more buy option, and this contract will expire in the next 3 days, which simply means that it is still valid to an extent. So 1.05 will be a very good buy scenario, a very good buy price range for us, right? 1.05 100, right? All right, 1.05. So traders are betting that price is still going to go. Some traders are betting that price is going to go above 1.050. So for people who trade support and resistance, you might be looking at this, and then when price gets to this point, by the end of the day, let's say price gets to this point, and then we are looking at it to sell based on, let's say it's a support, it's a resistant level, right? You want to sell, but of course there are still a lot of buyer at this particular point. That's why most of the time you come on your chart, you see that price, you'll be looking at to short from a particular price level, but for a particular resistant level, price keep buying and buying and buying, just go above it. They feel like your strategy is not working. No, it's working, all right, but we just had a lot of buyer at that particular time, right, at that particular price, all right, and at that particular time. So what you want to do, since you have access to this volume matrix, right, what you want to do is you want to wait for the market to retrace back. Since it break above it, fine. You want to wait for a retest and then probably a continuation to the buy, a continual buy to the upside. All right, so you can see that how you would have been, like, how you'd have known where volume is, and then try to avoid some of these areas. All right, and that will change your game entirely. All right, that will change your, like, let's look at this. We have a contract that will expire in the next 5 days, and then we have 1,057, right, around 1 point. That is a put option, a sell option, right, a sell option, right, a put option around 1.0475. all right, let's put our line there, 1.0475, 1.0475. all right, so since we have sell opportunity there, we can see that it's expiring in the next 5 days, which means a lot of orders are still here, right? 1,057 contracts, right? Put contract, which is sales contract, are there, which simply means that you could expect, let's say you could anticipate where's my tool? You can anticipate a buy to this upside a little bit, and then before a dump to the downside. All right, so since here since there are a lot of sellers around here, right, you can anticipate that a sell should come down from here. So, and if you look at it market structure wise, right, market structure wise, you can see if you want to go based on market structure, you see a break of structure to the downside, right? Let me go back to this one. Let me go to 15 minutes. A break of structure to the downside, so you can anticipate. Now, for those of you who trade break of structure and other stocks, right, to the downside, now you can see that fine. Here will be a very good sell opportunity for you, because looking at the volume price, we have a contract that will expire in the next 5 days, right? And then there are over 1,000 contracts. Over 1,000 contracts there, which means a lot of traders, a lot of big players are betting that market is going to sell from that point. So looking at it, we have, for those of you who trade fair value gap, we have a fair value gap around that point, right? We have a fair value gap around that point, and then now you can see that, yeah, of course, this is where you're looking at the sell from. So another thing you understand, I need to say this, I need to clear this, right? These trading, if you're using a free trading view, right, you will not have access to how they call it, real-time price, right? Your price will be delayed by 15 minutes, so you should know that as well. So sometimes you might be stopped out before the price move, right? So I will advise you to also subscribe for premium if you have the money, right? So you have access to real-time price. So you expect the price to come this place, right, this particular price level where a lot of sellers are, then you expect a sell from that particular zone. So you could see how you could use this, you could have used this to catch so many trade and then avoid unnecessary losses because of volume, right? Like, look at this typical example now. Because we had this here, we had over 1,000. We have over 1,000 contracts around here, sell contract around here, and then the buy contract is very, very small. All right, so fine. You have that in mind. You draw your price level, do your analysis, your this thing. Now, like I say, you can't trade volume on its own. Do your analysis. All right, then go to volume and check where you want to sell from. Are there buyers or sellers? Because if there are buyers there, your strategy, your entry point might not hold. All right, it might not hold. So you want to check. All right, you want to check if there are buyers and sellers at that particular point you are looking to sell from. All right, for people who might have want to enter from here based on they want to get something, let me check. Right, a short position. You want to enter from here, for instance, now and then you want to put your stuff here and then you target here and other stuff, whatever. I don't know. You would have seen that you would have got a more accurate entry with a good risk to reward, right? And then you've gotten a very good risk to reward. And target the next look. All right, you can see how you would have gotten a very clean and good risk to reward around that particular point. So let's go back. So you can just, this video is getting long already. Wow. So you could just go right here, do your research, right? Study the platform, study this platform. I'm going to drop the link below this video or above this video. I don't know where it's going to appear, right? So you just have access to these map. All right. So it's very, very important to use this. So here it's called the strike price, the price where most volume are. All right. Remember, the call simply means to buy and put simply means to sell. Remember, you have expiration date. So you might be looking at a contract, right, in a particular price level, and then the contract expires, switch to the next one immediately, right? Because that contract has expired. They have different meaning why contract expire, right? But I'm going to do a separate video for that. Maybe a comprehensive video is going to be a little bit lengthy, maybe an hour or so, like explaining everything in details. But with this, you should be able to come on the chart, do your analysis on the norms, right? Do your analysis, run your analysis, and then you come here and then you look at where you want to sell from. Are there more buyers? Are there more buy volume or sell volume? All right, before you. This one is free, right? Except like me, I use DOM and footprints, right? So I have access to real-time orders and history of a real-time orders. So, but that is a paid software, right? For those that don't have the money to do that, you could use this to determine where area of volume is. So you come, you do your analysis, norm on the norms, right? You do your analysis. For those of you that do break of structure and fair value gap, you see a break of structure, you see a fair value gap, and then you have a precise place to take your entry from. And then you put your stop loss, because anything can happen in the market, all right? But with this, it will increase your win rate drastically. Trust me, it will increase your win rate drastically. And before I end this video, right, I need to show us something real quick, right? 10 Trade, all right, is doing a funded traders competition. All right, if you know you're good in trading, if you know you are good in your trading skills and ability, right, here's an opportunity for you to win 1 Bitcoin for the first position, second position 3 Ethereum, and third position 5 Solana, up to 100 position. All right, there are prizes for people to win up to 100 position. Okay, fourth to 10th position will 30k live funded account. Like that. All right, so also look above or below this video for a link to register. All right, for a link to register and be part of this challenge. This is an opportunity for you to change your trading life, to change your career entirely. Imagine winning 1 Bitcoin, bro. This one loud gone. All right, so make sure you register with the link below above this video, and at the same time get a 100k. Before I forget that, you need to get a 100k account, evaluation account. All right, you need to get a 100k evaluation account to participate in this competition. All right, so guys, that is it for this video. Don't forget everything I've explained, right, so that you will increase your win rate and have a precise entry whenever you're taking a trade. All right, guys, and don't forget, make sure you apply for this funded trader competition. And if you are watching this on YouTube, please kindly subscribe to the YouTube channel. Also hit the notification bell so that whenever I drop a video, you will be notified. Thank you so much, guys. Peace out.